Welcome to Capital Link's company presentation series.
Hello everyone, I am Barmparis, Vice President of Capital Link. Welcome back to the 2024 Capital Link's corporate presentation series. In this series, company management highlights the company's current operations, business development, growth prospects, and sector outlook. We are pleased to have with us today the senior management team of Safe Bulkers, Dr. Loukas Barmparis, President, Mr. Konstantinos Adamopoulos, CFO, and Mr. Thanasis Antonakis, Assistant CFO and Chief Compliance Officer. Safe Bulkers is an international provider of marine dry bulk transportation services, transporting primarily grain, coal, iron ore worldwide. The company's common stock, Series C preferred stock, and D preferred stock are listed on the NYSE and trade under the symbols SB, SBPRC, and SBPRD, respectively. In terms of logistics, we begin with a company presentation followed by Q&A. Please note that participants can submit their questions through the Q&A button on your screen during the webinar. Your questions will be answered during the Q&A session. Before we begin our webinar today, kindly note that this discussion is strictly for informational and educational purposes and should not be relied upon. The webinar does not constitute an offer to buy or sell securities or investment advice or advice of any kind, and Capital Link bears no responsibility for the content. Let us now begin with our discussion. I'd like now to pass the floor to Dr. Barmparis. Please go ahead, sir.
Good morning to all. I was asked to make this presentation to our investors, and I thought that where should we focus at that point? The truth is that the results, our financial results, will come in 2 to 3 weeks' time out. So all the questions that should be addressing our financial condition or the market should be discussed in our next presentation in 2 to 3 weeks with our results. But I thought that the most important issue for a company like ours is what we have really as a hardware. So I thought that a good presentation should be focusing on our investment strategy. And this is important, specifically at that period, because we have new environmental regulations, we have environmental taxations implemented, and also we are heading, even at a slow pace, towards vessels with zero footprint emissions in the future. If we go to the next slide, we would like to focus on what we are doing the last 2 to 3 years. The development of ESG strategy is very important for us. We have specified our vision. What we really want to be is, and our investors should really looking for, is to become one of the most competitive providers of marine dry bulk transportation services worldwide and maintain a reputation which was built over 60 years and conduct this business as one of the most reliable and environmentally resilient pure dry bulk company. And our mission to constantly exceed our customers' needs by safely and efficiently transporting dry bulk cargo worldwide, incorporating environmental, social, and governance values. All these are reflected clearly in our ESG report and strategy, which can be found in our website. But this is a very important value for the company, and I think we are one of the most advanced companies in this year. In this slide, we can see, in slide 5, we can see the timeline of various regulations. So let's say the last few years, we have several regulations kicking off from time to time. In 2017, the ballast water treatment regulation. In 2020, the SOx regulations that had led to the installation of several scrubbers. and also the Phase 2 regulation, EEDI Phase 2 regulation, which means the reduction, the new buildings to be designed with 20% lower carbon emissions compared to 2008. Then we have the environmental regulations, which is called IMO CII, the carbon index, or AER, that classifies the vessels to various categories A, B, C, D, E, providing certain advantage to vessels which are classified as A, B, and C category. Of course, the regulation EXI, which means the regulation of the main engine to lower speeds, so the vessel will not consume as much. But then in 2024, we have the EU ETS, the European Union taxation scheme, which leads to taxation of CO2 emissions when the vessels come and leave the European Union. From 2025, we have the Fuel EU, which is a regulation that targets the fossil fuels and provides advantages to alternative fuels. And gradually, we have several other regulations, revised EXI, and we expect the IMO greenhouse gas strategy in the following years, which will provide additional costs to the vessels that cannot perform or they are not able to use alternative fuels. Alternative fuels means fuels that lead towards zero footprint CO2 emissions. If we go to slide to then, just go back once more. I would like to point out here very quickly in this slide that when in 2020 the EEDI Phase 2 regulations kick, we started ordering vessels which were designed according to EEDI Phase 3, meaning 30% reduction of fuel consumption and the CO2 emissions. This Phase 3 regulation, as we can see here, kicks in 2025. So the company has started a renewal strategy of its fleet, putting new orders for Phase 3 vessels and selling, initiating in the next year the sale of certain older vessels, and also in 2023, a couple of years before the Fuel EU regulation comes into place, we have ordered also 2 methanol dual fuel vessels. Now, if we go to the next slide, we can see here that why we have ordered Phase 3 vessels in 2020. We have started ordering these vessels. You can see here that most of the fleet out there does not belong to any phase. So vessels which are built according to Phase 3 regulations will have a substantial commercial and environmental advantage compared to the market. Still, I need to mention that most of our vessels that we have and we maintain are vessels which are designed according to specific regulations, and even 2005 or 6 vessels, you can see that maybe they are classified as B or C, and they have superior performance compared to all the other vessels that are out in the market. If we go to the next slide, we see how we have developed our ordering. So we have started ordering new builds Phase 3 vessels, 2 in 2020, 7 in 2021, 2 in 2022, 4 in 2023, 1 in 2024. So we have started ordering, we have started selling. The red bars are represent the sales. We have started selling from 2021 and at the same time, we also acquired second-hand vessels, which were much younger. in order to be able to maintain our financial performance and our operating performance. So you can see that we have a concise policy. The deliveries, which are shown in the green as green lines, are expanded from now until 2027. And you can see here that we have already taken delivery of 9 vessels, while we have still 7 on orders, 2 of which are dual methanol ships. If we go to the next slide, we give here some, let's say, highlights of our policy. They're more detailed. So, as you may see, we are right now in 2024. We have already taken delivery of 9 new builds of about 800,000 deadweight tons. Their average age is 1 year, and we have paid already for them 282 million. So basically, about, let's say, 20-25% of our company fleet is already consisting of Phase 3 vessels. If we go to the next slide, we can see the order book, still what we have ahead of us. So 7 more to go on order until 2027. Again, similar deadweight capacity, about 0.8 million deadweight tons. We have already paid as advances 73 million, and the remaining capex for them is 206 million. This makes the front of the company towards the new development. So all these vessels, all these 16 vessels, basically are coming to the company gradually to renew the fleet. At the same time, we have sold already 10 vessels from 2021 to 2023. It is important to note that the vessels that we maintain, they have the highest standards. They are quite efficient. They always have the relevant upgrades. So a vessel which is sold by us is seen as a quite efficient vessel that has a substantial meaningful life and performance until the end of its life. So the vessels that we have sold were about 15 years of age on average, and the proceeds were 180 million from these sales. And at the same time, we managed to renew these vessels by acquiring, if we go to the next slide, by acquiring 7 second-hand vessels with a acquisition cost of about 187 and average age 9 years old. So you can see how this sale and second-hand acquisitions are making the fleet younger. The important here to note is that the vessels that we have bought were larger. So we sold 10 vessels of 0.8 million, and we bought 7 second-hand vessels of 1 million deadweight tons. This is, let's say, a part of our renewal strategy, which was good for the previous year, because as we were selling the vessels, we wanted to have younger vessels in our fleet and to be able to continue to compete and make our financial results until we receive the new orders, which will come gradually until 2027. If we go to the next slide, we see here what we are doing in our existing fleet. So existing fleet, it means that all these vessels that are that belong to our fleet from built from 2005 onwards. You know that we have already installed, according to the previous regulation, these 48 vessels. We have retrofitted ballast water treatment systems. We have installed 22 scrubbers in our vessels, and we have scheduled 1 more vessel to go. And the important thing is what we're doing to the rest of the fleet, to the existing fleet. We have already upgraded 22 vessels, which, and when we say environmental upgrade, we mean ducts, low friction paints, smaller propellers, fins, etc. The total cost of our environmental upgrades is 90 million, and it supports the performance of the existing fleet. This is the very important thing, that our fleet, our existing fleet, being mainly Japanese ships and quite efficient ships, still we upgrade them in order to be able to compete the following years until 2030, 2032, globally, also in terms of environmental performance compared to the global fleet, the global dry bulk fleet out there. If we go to the next slide, you see the average age of our fleet and how it develops. Getting younger vessels and new build vessels. If we take delivery of all these ships, and if we don't sell any other ship, you can see that what would be the number of the company. Of course, we expect to sell more ships as we get more deliveries. And you can see that from 2020 until 2024, 2025, I mean, the fleet age, despite there are about 4 years past, the fleet age remains the same as most of the younger vessels or newbuild vessels are added in our fleet, and older vessels are being sold. If we go to the next slide, you may see here a couple of things about our how we reward our shareholders. The issue is that we have done all this development, and we are creating a company which will be quite solid environmentally and operationally, able to compete, and at the same time still we maintain we reward our shareholders. We have completed in the past until now 10 million shares repurchase program. We have an active 5 million shares repurchase program right now. We have an annualized dividend of about 5%, and we have paid 46.8 million in dividends for common shareholders and 17.5 million dividends for preferred shareholders. If we go to the next slide, this is let's say a snapshot that we have created, trying to remind you the benefits and why should someone invest on us. So who we are Safe Bulkers is public since 2008, pure dry bulk company with 48 vessels in the water. We have rewarded, and we're rewarding our shareholders with a 5 cents per share dividend. It's about 40% payout ratio. The interests of the management are fully aligned with that of the public shareholders because of the high percentage, about 50%. The management is very experienced over so many years, and highs and lows of the market, and we have extensive track record. We have a good reputation in the market. We cooperate mainly with reputable charterers, and we have and everybody has a very good knowledge about a very good idea about us. We have a very good market reputation. We have a fleet, as we said, of 48 vessels. We have already taken delivery 9 Phase 3 vessels. We have upgraded 22 vessels. We expect 7 more new builds to come gradually in our books as until 2027, 2 of which are methanol dual fuel. This is an advancement towards zero carbon footprint. At the end, by all this renewal strategy, we maintain almost constant average age of our fleet. In terms of financials, which we will only discuss later when we issue our financial results in a couple of weeks' time, still the company has a 37% loan to value, comfortable debt, ample liquidity, revenue backlog, and very good relationship with lenders and the capital markets. So we continue to have a model which is focused on the performance of our fleet and the ability to renew the fleet and be one of the best companies in the public markets. We are very well positioned to capitalize on the stringent environmental regulations as they are coming gradually the following years. We have an asset-focused management policy focusing on ESG strategy. We continue to reward our shareholders, and we actively build our fleet, our future fleet, with sensible moves gradually, with looking to competition and to expansion and to environmental compliance that will be used in order to get operational advantages in the market and better financial results. By saying this, in the next slide, we have put a few photographs of our new builds, basically 9 new builds there already in the water. We are very proud of this, as such vessels having a lower efficiency can have a premium on charter hire, and of course a premium on environmental performance. Having said all this, I would like to thank you for listening to me, and we will be happy to answer any of your questions when if they are posed.
Yeah, we have the first question from the floor on why would someone invest at this point in the cycle in safe bulkers?
Look, the investment decision always is individualistic, so each individual can take a decision. I would, let's say, what we are trying as safe bulkers to do is to achieve to present a proposal to our shareholders and the future shareholders of a very solid, energy efficient, environmentally friendly, and attractive fleet. I think this is the basis of any success in the future, and this is being completed with our program, which continues until 2027 with our new build program.
Second question is, how significant are the new environmental regulations?
The environmental regulations are very significant because right now we have also a cost attached. First of all, if you are rated as with a low rating, for example, E rating in IMO regulation, the CII, this represents a very big disadvantage to cooperate with first-class charterers, and also to come to Europe or to United States or to Australia. The second point is that also if you have, for example, an E vessel, you need to file an upgrade program that will lead this vessel not to D but to C category, which is quite difficult to achieve, having an E vessel to jump to the C category. But also right now we have important costs which are associated with the performance of the vessel or the charter hire. I can tell you that, for example, if a vessel has a consumption of 25 tons per day, one such vessel of medium size, this represents times approximately three is 75 tons of CO2 per day. If such vessel goes to Europe, half of this quantity should be paid, should be delivered as EUAs to European Union. Basically, 37.5 tons or 37.5 EUAs. If we consider that the price of an EUA is today is about 65 euros, this ends up to 2,500 euros per day for a trip towards Europe. Of course, this year, 2024, we don't pay 2,004, we pay 40% of this. Next year, 70%, and the following year, in 2026, the 100%. But consider that a market of 12, 13, 14,000, even sometimes 5 or 6,000 or 10,000 dollars per day. How competitive can such a vessel be if you need to spend 2,500 euros per day for such fuel? While I mean the more energy efficient vessels could be by 30% lower, which represents a substantial advantage.
And if I may add here, Loukas, that we have already taken delivery of these 9 new builds, so it isn't very easily done by another peer or competitor to put on orders now and be ahead of the game as the environmental regulations will be becoming more increasingly stringent for the years to come.
Yeah.
And also, I'd like to add that we see that the regulations, there is a tendency of additional, or we see that additional regulations coming on the market. It's not, the European Union is not an isolated case. We will see soon other countries, adopting this, and maybe China have put in place similar regime. So you can't ignore, let's say, the situation.
Yeah, to that relation comes to the next question, Konstantinos. It says, do you expect IMO to adopt a global carbon tax similar to the one adopted by the EU ETS?
Look, the IMO is working towards this regulation because, and we expect that after 2026 we'll have a new regulation adopted by IMO, because at the end of the day, regulations like ETS or Fuel EU will not be only implemented in Europe, but I mean, United States and other countries will go towards this direction, and of course IMO, which is expected to take such decisions by 2028. So I think this is a route that is moving ahead, and we cannot change it because the CO2 emissions undermine substantially the climate of the planet with disasters and climate disasters and problems everywhere, unexpected. And what we expect to see is that by 2030, all such nations will go towards stringent regulations, which will make the life of the uncompetitive vessels shorter.
Next question relates to the Red Sea. How has the drybulk shipping been affected by the Red Sea events?
Okay, before I go to this question, I would like to add that still, the important thing with our fleet is that all our vessels still share a very good category. They are very good performance, even the oldest vessel. And this is very important with upgrades that we have done, that we continue to be very competitive. Also, not only in the new builds, but also in the existing fleet, which is in our books. Now, about the Red Sea, the issue is that there are certain problems in the shipping through Red Sea and the Suez Canal. This, of course, forces owners and charterers to use alternative routes which are longer around Africa to come to Europe, which expands the vessel, the fleet, the time of the fleet, of the voyage. So the duration of the voyage. This is not. We don't consider this substantial, but I think if there is any effect, it should be more positive than negative in terms of charter hires. Of course, the difficulty in Red Sea is that there is a substantial risk if you go through there, because which is associated with the bombing of a vessel, probable casualties, high risk, war risk premiums, etc., etc. And we would like to see that this situation to end, and that the vessel will be able to freely go through Red Sea and Suez Canal.
Okay. Next question relates to the capital allocation. What is the capital allocation priorities of Safe Bulkers?
We'll discuss all these questions also to our next presentation, but the capital allocation is we want always to reward our shareholders and at the same time to maintain substantial operational cash flows to finance our new build program without increasing the leverage of the company.
And there is a question about our business strategy. What is your business strategy with reference to Canada and Mexico over the coming 8 years? I believe it's very specific and relates to trades that we don't usually attend, and our vessels do not usually call. But in any case, the overall business strategy is focused on, as Loukas mentioned, on renewing our fleet and receiving all our new builds, the 7 of them that are on order in time, in order to be more flexible and positioned at a very well point in the cycle.
What I wanted to add is that we have been able to place the orders ahead of time and at very favorable contract levels as well. We started, the first order was placed just as we were getting out of COVID, in the low, below 30 million. So the average price is very competitive compared to the current market values. Taking into account also the high specs, the reduced consumption, reduced emissions, and improve the hull lines from top-notch shipyards.
Okay, and last question relates to the current opportunities and risk towards decarbonization.
The decarbonization is a difficult path. that will last for several years. So we need to live with that. We have not yet the advancements that we would expect in terms of new fuels that should be there in order to be able to compete and take the necessary moves. Basically, owners quite often are asked and take decisions and risk in relation to the new fuel, while normally, for example, you buy a new car, the fuel is already defined in the car and the industry has done the research. So we would expect that the global industry, the yards and the engine manufacturers should have done also should be doing the research that is needed in order to have solid solutions. I don't think we have right now solid solutions, so we're experimenting through taxation schemes. But at the end of the day, I believe that in the next few years we will be forced to go towards such directions, take decisions, and continue this decarbonization. The advantage of decarbonization is by reducing, let's say, the CO2 footprint. At the same time, you reduce your consumption, and so the vessel is more competitive compared to existing vessels, and thus can have a premium on the charter hire.
There's a question about the loan to value. What is the preferred LTV percent that the company wants to maintain in the near future?
Look, I mean, the loan to value is a flexible figure, but we'd like to see figures closer to 30% rather than closer to, I mean, above 40%. But we are in a comfortable region.
I just want to add here for the benefit of the question that we do have ample liquidity and a lot of contracted revenue going forward. We have no more questions from the floor.
Well, thank you to you guys, Safe Bulkers team here for the real excellent presentation and questions answered. I'm sure we've answered most of the questions here. And I would like to thank everyone for taking the time to listen to today's presentation. We had another excellent turnout. Just want to note here before signing off that the replay will be made available on our website, capitallinkwebinars.com, and our YouTube channel. So thank you everyone again, and you're free to disconnect. Thank you.
Thank you.